Welcome to Al Stocks. In this video, we're going to be talking about Jumia, ticker symbol JMIA. It has been coined the Amazon of Africa. We're going to break down the company if you haven't heard it before and tell you about what it does, what countries it resides in, and the long-term and short-term outlook of the stock. Because tomorrow, before market open, Jumia and Sea Limited, which is an e-commerce platform, are reporting. And in this video, I'm going to be talking specifically about Jumia. Now, for all the people that have not heard Jumia, and this is the first time you've ever heard about it, think of Jumia as like the Amazon of Africa, the eBay of Africa, the Square of Africa. I'll get into more specifics. It's a marketplace that has established itself as the leading pan-Africa e-commerce platform with logistics and Jumia Pay. You can buy smartphones, buy shoes, groceries, recharge your data plan, pay your bills, order freaking pizza. They have established themselves in Africa as a dominant force. In fact, I have some friends from Africa and they tell us, oh wow, you have a Jumia-like thing in America as well. And they were referencing Amazon, which is technically way bigger than Jumia. As you can see, the types of brands that Jumia sells are name brands. These are not off-market brands. We're getting L'Oreal, Intel, Apple, Samsung, HP, P&G. These are all brands that we use and love and adore, and Jumia is integrating these successful brands within the African market. As I stated, Jumia is the preferred place to shop in Africa. Furthermore, once customers go through the Jumia marketplace, they come back. There's an 88% loyalty. And after the many years they've established themselves in Africa, they are the trusted brand. As you can see, the mobile penetration in Africa has increased dramatically since 2000 to 2010. Think of Jumia as like a diversified portfolio. There are different countries within Africa that have different penetrance of technology, from all the way to low penetrance to leaders in penetrance in mobile devices. As you can see, Jumia has a collection of different African countries within the continent that are on a different level of penetrance. However, as you can see, the highlighted pink boxes are all the countries where Jumia has access to. The reason why there's two X's here is that earlier on in the year, I believe last year, they went ahead and canceled these countries because they weren't performing as well. So this is a cutthroat industry where if you're not doing well, this company knows how to navigate really quickly. I believe that having access to a variety of countries with different mobile access gives them an ability to scale in with their Jumia Pay platform, which I believe, as you know, is the future. Jumia is easily trying to capitalize within the African e-commerce network because we know as Americans living in the United States, we know the future. And if we know that e-commerce has worked really well for us, we can possibly make a conclusion that Africa might be able to adopt and accept the e-commerce platform. When you compare developed economies to Africa, you can see that there's a higher growth. There's a higher rate of return and investment when you go into Africa. I always think of Africa like investing in China 30 years ago. You know, no one thought China would ever be where it's at as of today. And I believe Africa is the next new China. There's just so much growth. And I've analyzed the GDP, and I believe the GDP of Africa in the next 30 to 40 years, it is going to boom. But the question we have to ask ourselves is Jumia going to be the dominant platform here? Now, when it comes to Africa, it's really hard to make the comparison. However, there are other companies that we know, such as Amazon, Mercado Libre, and Jumia. Now, I don't have to explain Amazon and all the 15 countries it services and the $33.8 trillion in consumer spending within those economies that it services. However, now, what people might not know is Mercado Libre services Central America, Brazil, Mexico, Portugal. This is a very dominant e-commerce platform, and they have $4.8 trillion in consumer spending. I believe you can easily compare that with Africa's $4 trillion worth of consumer spending. But here's the trick here. If you look at Mercado Libre, its market cap, $80.49 billion. But if you look at Jumia, it's sitting at a 1.64 market cap. So if Jumia acquires only 7% of Mercado Libre's market cap, Jumia's stock price would be around $68, which is a 4x from the current stock price. And as we know from a whole worldwide perspective, we know that Alibaba has been successful. We know Sea Limited, for people that don't know what Sea Limited is, it's an e-commerce platform in Singapore. with a $187.47 billion market cap. And a lot of these stocks started trading at around $20, $30, right around where Jumia's at. Now, we already know PayPal, eBay, Mercado Libre, which I just discussed, but one that I have not discussed is Ozone, which is an e-commerce platform in Russia, and I will make a separate video about that. But this video is going to be focused on Jumia because of their earnings tomorrow. Now, when you look at Jumia's earnings, they are hideous. You know, when you expect an e-commerce platform, you expect them to have high growth and high revenue. But the problem is their revenue is not growing. And to be quite frankly honest with you, now when the pandemic started, a lot of people were expecting a boom in e-commerce just like the rest of the world, but it went down. A lot of it has to do from what the CEOs were saying with the culture of Africa. It's really hard to penetrate this culture, and that's what they were saying. And they needed more time to gain that trust. Now, personally, for me, I'm not really buying that because their revenues haven't increased. So the earnings report set for tomorrow, a lot of investors are wanting to see, is this company capitalizing, or are they going to give an excuse? Oh, we've had some problems with supply chain issues, which is true. But investors are starting not to have patience with the stock. In terms of gross profits, they have been doing really well with that. The EBITDA I will start discussing. They're still not making an income. They are striving for break even. One thing that they pride themselves over is their EBITDA adjusted loss. So what they're saying is from 2020 Q1 to 2021 Q1, they've reduced their EBITDA loss, which will help them in the future to break even and maybe someday become profitable. Another thing that I wanted to go ahead and talk to you guys about is the institutional buyers. Now, you can see that Wells Fargo has invested 54,000 shares, and just recently we got word on November 15, they just increased their shares by 34.68%. There are still some other people that have backed out from the stock. We are seeing some institutional adoption. Now, this is for the people that don't know anything about this stock. This stock went from literally like $3, $4 to an all-time high of $69.89, falling down to its lowest price since we've seen around $17-ish. Now it's hovering at around $18.61. Tomorrow's earnings is going to be a huge factor on where the stock is going to head. With the Feds starting their tapering of their bond purchases later this month, it is starting to look very bad for the tech sector because it has been propped up by the monetary stimulus. We are also scared of risks such as a taper tantrum. I think deflation is not a fear anymore because we are suffering from inflation. The CPI data coming up at 6.2%. The Treasury yields are up, and I just want to talk quickly about what Cathie Wood said here. She specifically stated, the equity market is likely to reward disruptive innovation strategies once again when headline inflation breaks and or fears of recession increase. If the bond market is correct, one or both will be obvious during the next 3 to 6 months. This was written in August. Unfortunately, inflation is not breaking. It is not transitory. However, she believes, and I believe this as well, that after the holidays, prices will come down and the CPI data will go ahead and create an inflection point. And there might be a possibility where stocks like this and growth stocks such as Palantir, Clover Health will have their day and rally. From an educational perspective, yields move inversely to bond prices. Thus, if bond prices increase, the yield would go down. The yields are going up right now, which means the bond prices are going down. But look at the 10-year federal note. It's sitting at 1.61%. Inflation is 6.2%. AKA, being in the bond market right now is not a good place to be. The best way to get a return right now is either through real estate, which is why the housing market is extremely high, and the stock market. Now, the reason why I am semi-bullish on this company is we see a lot of the billionaire tech investors gaze their eyes into the African economy. You have Facebook's Africa expansion could help foster a new hub like a Nigeria's Silicon Valley. Mark Zuckerberg meets with African tech leaders on Nigerian tour. Facebook invests $1 billion into a new sea cable to improve internet access in Africa. These all will benefit possibly companies like Jumia if they survive. Furthermore, Mark Zuckerberg's foundation is investing millions in a company that trains coders in Africa. Not just that, Microsoft to spend $100 million in Kenya, Nigeria Tech Development Hub. Even Bezos-backed startup and Made in Africa investments, they're all looking into Africa as the next new China. Even Jack Dorsey and other major tech figures are suddenly interested within the African GDP. You know, it's quite interesting that if you analyze the CEOs of the company, I don't think they're in it for the long run. I believe that these CEOs are just trying to make this break even and possibly profitable to a point where either Facebook, Amazon, or even Alibaba, someone goes ahead and buys them out. I think that's what's going to happen with this stock. They don't seem like they want to run this company for the next 30 to 40 years. That's not their intention. I think they want to build a platform, a base, a brand, and sell it. And possibly even Facebook might buy them out because they've invested so much in Africa. One thing that I'm going to be looking at is the revenue. I can tell you right now, if the revenue does not grow to a significant percentage, this stock is going to fall. I just can't see it at these levels, considering that it's not making a hefty profit. Once we go ahead and see the revenue, I am going to follow up with a price target using my intrinsic value calculation, a strategic calculator that goes 10 years into the future, discounts at a 10 to 15% discount rate using a 2% perpetuity model divided by the outstanding shares. This is a very sophisticated method that a lot of financial analysts use, and with 10 years of experience, I would like to share that with you. Now, if you stayed this long, consider liking, subscribing, and turning on all notifications. As always, God bless you, and I'll see you on the next one.